Hang Seng is down 320 points. That's a 1.5% cut.
The dollar has been down and market has essentially been saying that, look, regardless of what the Fed says, when the recession hits, the Fed will be forced to cut, right?
Poonawalla Finance is selling its housing finance arm to TPG Group for 3,900 crores.
Nifty down just about 45 odd points, sensex down 160 points.
People are more focused on the inflation peaking out at the moment.
This is more in terms of the guidance that we have been giving in terms of how we want to improve our presence in chronic therapy.
There is a dip, but it doesn't usually last. So far, it's there, right there, 18,571.
The block happened in the block window, which suggests that it was well bid.
Floor price of the offer made by the government for about 2.5% of its equity, as the base offer for sale is 680 rupees.
I think that the economy currently is doing far better than what official data reports.
The ECB, of course, today as well hiking their rates by 50 basis points, most likely. That is also a deceleration.
Currently, it's closing in on that 18,500 mark.
Well, that was a day so far. You're with us here on a fresh new edition of Closing Bell. The market is seeing deep red today, 140 points lower. And it's a all-boys club today. Mangalam, Nigel, hi, good afternoon. And, we've got red on the screen, right from the word go, actually. The buy on the dips is not, it's not at least come into action so far. It's happened before that in the last 30 minutes. The rest of the day does not matter. Will we see something like that? It looks difficult because... at no point has that impulse come back, at least today. So we are basically back at the 20-day moving average on the Nifty, which is as of yesterday's close, that number was at about 18,535. So we're just under it. It'll be good by close if you're able to kind of regain that, close above it. In any case, closing is what matters. Closing under it is what matters in a meaningful way. 5-10 points won't really count. But we are holding the 18,500 level. We did go below that by about 5 or 7 points or so. What else? Actually, all sectors are in the red. And the top losers are global sectors. IT is down quite a bit. It did see a little bit of gain over the last few sessions, but that's all gone today with today's cut. And metals are seeing cuts as well. And as I said, most sectors are red. You got banks which are seeing some selling pressure. So the bank Nifty itself, but the PSU Bank Index is also down after 10 straight sessions of gains. The PSU Bank Index is down 0.75%. So, that's pittance as compared to the gains we've had. And of course, from a global perspective, there is red in Europe and there is red as far as US equity futures go. Will we see a follow through? Yesterday was a whimper of a reaction out of US markets. Will we see something more later today? I think that's the question near term. Nigel, hi.
Well, it's been a disappointing trading session for the bulls, and it's been a down trading session. If you pull up the intraday chart on the Nifty at any point of time, if you shorted today, you'll see that, in fact, you made some money. And we haven't had a session like this for the last few sessions. So it's a bit of a disappointment out there. The markets, both the Nifty and the Nifty Bank, they're at very, very crucial support zones. In fact, the lows of today have just got broken out. So let's pull up the previous lows just a few minutes ago. So on the Nifty itself, we've broken that 18,497 odd. On the Nifty Bank, we've broken that 43,800 odd mark. So it's looking a little bit iffy right now. If the markets need to bounce, they need to bounce from these levels. And the call writing today has come back into play. So the 18,550 call, the 18,600 call, both of them are getting written very, very aggressively. At both those two strikes, there is more than 1 crore shares of open interest that have got built up. We have just 59 minutes to go. So aggressive writing out there is telling you that the bears believe they have this in the bag. Resistance is seen at around that 18,575 to around 18,600 because of the writing seen at those levels. The question is, how low can we go? Can we take some bit of support over here and make a bounce back up? For the time being, it's looking a little bit iffy because we have broken those support zones. Mangalam, what else?
Absolutely, Nigel. In fact, in yesterday's trading session as well, we saw the FIIs go ahead and unwind some of the short puts. So that was telling you that the downside may have opened up just a little bit more, and that's playing out today alongside the call writing that you're speaking about. But importantly, one of the bigger messages one gets from the market is what happens with the mid-cap index. And that is what one can look at and draw conclusions for the large cap as well. Buy on dips is not working. That's what Prashant said. And that's exactly what's taking place in the mid-cap end of things as well. As we speak, the market's slipping swiftly. The mid-cap index, which was outperforming all through this month, is an outperformer today in the sense that it's fallen just 0.2% as against the frontline indices, which have fallen 1%. But the story of the day really is the market breadth. If you just take a look at it, for most part of the day where the street believed that, okay, maybe this bounce will be bought into, most of the advances were, outpacing the declines. But then once the Rubicon was crossed, we fell below the 20-day moving average of the Nifty. We had the declines actually go ahead and outpace the advances. So we had the red line move above the green line. And as we speak, they're at the widest that we've seen in today's trading session itself. 1,700 stocks declining for about 1,200 advancing. So those are the factors which are really playing out, and they indicate some weakness. Will be interesting to see what happens in the next 59 minutes.
Okay, all right, Mangalam. Well, first up, let's run our viewers through what we have lined up on the show. And then, in fact, we'll get straight to the market action. Poonawalla Finance, well, that inks the deal to sell its housing finance subsidiary, Poonawalla Housing Finance, to TPG for 3,900 crores. Mr. Hadar Poonawalla, the chairman of Poonawalla FinCorp, will be joining in to discuss all of that. And a clutch of foreign investors offload shares in Sapphire Foods while the government issues a notice for offer for sale of 5% in IRCTC. Complete analysis coming up on the show. And we'll also get you key excerpts from our conversations that we had earlier today with Neelkanth Mishra of Credit Suisse on the outlook for 2023. And finally, we'll discuss the way forward. Pashupati Advani of Global Foray will be joining in.
Okay, so that's basically the lineup packed over the next 60 minutes or so. But we have a very special guest now joining us, as promised. Poonawalla Finance has inked a pact to sell its housing finance subsidiary, Poonawalla Housing Finance, to TPG for 3,900 crore rupees. Adar Poonawalla is chairman of Poonawalla FinCorp, and he's joining us right now to take some questions. Adar, great to have you with us here. Good afternoon, Prashant this side. Just first question on the rationale behind the sale. What's been stated is that this is in line with the Vision 2025. That's absolutely correct. So I just want to ask you, housing finance is a pretty steady business, right? 20-year mortgages usually get paid back in under 10 years. Delinquencies are very low. What really prompted you to sort of sell this?
Yes, thank you. Great to be here with you to discuss FinCorp and its future strategies. You know, ever since we took over the Magma Group around 2 years ago, I've been focusing on growing the business and digitizing, the lending, the way in which we've been lending and collecting. Now, we took a strategic call, a while back to initially raise capital, if you remember, in Poonawalla Housing around 15 to 20%, just for the natural growth of that company. When we later on received offers, from various parties, we called for a board meeting, to discuss recently, and then decided that when we received an offer for the whole business, that look, the valuation was a fair valuation that we were getting. It has grown substantially over the last 2 years. And, these are two different independent businesses which need a lot of capital separately. So we said, let's focus our energy on the NBFC and find a great partner like TPG, someone with a vision to grow the housing finance company separately. And, that was the basis of the decision. And as a result, Poonawalla FinCorp now will receive, subject to regulatory clearances in the next few months, for the deal to go ahead. We've signed a binding document. We'll receive 3,900 crores, in Poonawalla FinCorp, which is great for all the shareholders.
Right, Adar, good afternoon. The street believes that the remaining part of the business is unsecured loans, pre-owned car loans and LAP. That could be vulnerable to a higher degree of churn given its relatively lower duration in comparison to home loans. How do you justify that?
Yeah, but I'll tell you, the way I look at it is that there's different risk profiles. For a housing business, you need to borrow for the long term because you're lending for the long term. In the NBFC and FinCorp, we've got loans which, go out for a few months. We've got up to 2 years, 3 years at the most. Now, I feel a lot more comfortable, given the scenario right now, in terms of risk management and asset liability mismatches, which other NBFCs have suffered, borrowing in the short term and lending in the short term as well. And don't forget our IRRs, our ROAs, ROEs, everything is so much better and easier to achieve in that kind of business, and that's why we thought we would focus on that and leave the housing business to someone else to get into. Having said that, again, we want to do more in the consumer finance part. We want to look at, as I said, digitizing the way in which we lend and collect. We're now internally able to, lend out more than 1,200 crores a month. So you've got partnerships and you've got our internal generation machine that can generate loans after pre-checking their credibility and all that. And look, not all of it is going to be unsecured. Let me add, in Poonawalla FinCorp, you've got some LAP. It's not home properties, but it's small businesses and things. So you do have some part of the book which is going to remain, like a secured book.
All right. Adar, mentioned a couple of ratios out there. I think the ROA you're targeting is 4.5%, right?
In FinCorp?
In the remainder part of the business.
Look, I mean, the ROA at the moment is 2.4% in Poonawalla Housing, and ROE is around 11.4%. But in FinCorp, it's substantially higher. So,
yes. So what are the targets out there, both on the ROA and the ROE front?
Well, I don't know. I don't know how much I can mention in terms of what we want to, what we'll end up achieving. But look, if you look at other comparables and other NBFCs, we plan to be in the top 5 in terms of those ratios, and I think that's very possible. At the moment, the ROE, for example, is a bit low because we're very under-leveraged. We're below 2 times our. We're leveraged less than 2 times in FinCorp, and that'll further go down a little bit with the cash that's going to come in. But if we plan to grow at around 30 to 40% annually in terms of our AUM, then you're going to see a substantial increase from today's ROE and ROAs as well. And look, with other partnerships that we're doing, the cost of acquisition of customers, including our internal ways of generating customers, is going to improve the ROA substantially as well going forward.
Right, we take that point, and we talk about investments, etc. here. It's an interesting one that you did because when you bought Magma FinCorp, like you said, about a couple of years ago, you put in about 3,450 odd crores, and now just one part of the business you've sold for 3,900 odd crores. So that's interesting. Also, in line with your strategy of maximizing value creation is something that you've spoken about. But again, we go back to the rationale of this because this is a longer duration, stable business. It hasn't even seen an entire business cycle. So one, what was the rush to sell this? And secondly, the other parts of the business, at what rate can the assets grow for you, the loans, etc.? 40-45% is what you're targeting.
No, I said yes, about 35 to 40% is the growth that we're targeting. Hello, sorry, I think you've...
Yeah, 35.
We're targeting annualized, growing at between 30 to 40% because we don't want to grow any faster than that in FinCorp because, then you're not really taking care of all the things that you need to vet, the loans and the kind of assets that you're building. Look, there was no rush really to sell it. In fact, we weren't putting Poonawalla Housing on the market. It was just that this offer came about and we thought that, look, this is a great way to encash and bring in some more cash at the FinCorp level, which enhances the net worth, and we'll see what to do with that cash. It could be used, for making some small fintech acquisitions. It could be used to returning, some money to the shareholders with the company buyback. We really haven't decided. All options are open.
That's...
And the point here is that, look, then FinCorp doesn't need any capital for the next 5 years to grow.
Right. Got that. Take that point. I mean, you almost make it sound like it was an offer you could not refuse.
Yes.
It was so good, right?
Yes.
So you took it. Got that. That point is exactly what I was coming to next, which is what you're going to do with the cash. You said it yourself. You're looking at some fintech acquisitions because you've been talking about digital and fintech. Could you tell us a little bit more? Because you said you've not decided anything firm, but that would be one use of this cash. How large, when?
If I were to look at the 5-10 year vision and where NBFCs and banks are going to end up, I think you're going to have far fewer branches. You're going to have less physical contact and interaction. which is a good thing because, you become more efficient and profitable. So from that angle, going more down the digital route and finding ways to give loans faster, to be able to vet the quality of the assets you're building, and including collecting. When we acquired this group 2 years ago, look at what we've done. We stopped doing business in certain territories. We stopped certain products which had a very high NPA. We are now AAA rated and AA plus with
do you have a short list of companies, fintech companies, a short list?
Yeah, Adar, we're trying to understand whether or not you're already in conversation, and if you could give us a timeline.
Okay, yeah, I'll tell you. We were in certain conversations, but at the moment we're not going to make any acquisitions with fintech until we at least close this deal.
Okay.
Once we have this cash, I think then we'll call for a board meeting and vet and explore options.
And this will close within 3 to 6 months, right, Adar?
Well, I would hope it closes between 3 to 4 months.
Okay.
We've just got to take the necessary approvals then with RBI, NHB, and all the regulators that I think we're going to be applying to very soon, because we've already got a signed SHA with TPG, so it's a fully binding deal at the moment.
So a board meet in the first quarter of FY 24 to consider an acquisition.
That, and also to perhaps consider what to do with the cash, because look, we will have a net worth which will be so high that you'll be hardly 1.5 times leveraged, and if you want your ratios of ROE and other things to pick up, then you don't want to be very you need to have a certain level of gearing. So I think we'll explore what to do with the cash. It could be, as I said, some acquisitions. It could be a partial share buyback, which will again offer something to the shareholders. So we'll have to explore all that at that time. I think after the deal closes, we can come to what we'll do with the cash.
But how long? Give us a timeline at least. So we have a couple of options out here. Maybe
absolutely. I think it's fair to assume around 4 months.
4 months.
6 months is on the outer side, but I think these regulatory approvals are doable in the next 3 to 4 months.
We've got a few listed fintech companies, all down 70-75%. Could you do another Magma?
I don't know. Look, there aren't many deals that one can, we worked very hard to turn this group around. I mean, you remember what the share price was and what the assets were and the returns that were there, and we've really worked very hard, and I don't know if we can keep buying assets and then keep turning them around. I think we want to build and focus on our own abilities and strategies internally, preferably. But nothing is off the table once we get this cash into the company. We will have to take a view what's in the best interest of all the stakeholders and the shareholders, and how it aligns with our vision for the next 5 to 10 years.
All right, final question, Adar, before we let you go. Any of the listed entities, since they are down so much, have you had a look at them?
What, the fintech listed entities?
Yes.
No, I think, I've just been focusing on this deal at the moment. And we'll cross the bridge, I think, as you said, in 3 or 4 months once all this closes with all the regulatory approval.
We'll be waiting for you on that side.
All right.
Thank you so much, Adar. Thank you.
Thank you.
All right, I think that's Adar Poonawalla with some clarity on what he plans to do with the cash. So we'll have to wait another 4 months, maybe first quarter of next financial year. And we will know share buyback possible, acquisition of a fintech company possible, and of course aggressive growth targets, 30 to 40% growth in AUM, and there is of course the target to but take up a return on assets to between around 4% or so. That'll be really on the top of the list if they're able to do that. 290 on Poonawalla Fincorp. The market, by the way, has not been doing very well. It's down 200 points. I mean, this is a sharp slip that we have on our hands now. And this is one of the largest slips that we've had in some time, actually, unless and until things don't turn around in the next, 35-40 minutes or so. How are other sort of housing finance companies trading at? Others said that this was an offer so good they had to take it. And he said the multiples offered were very good. I think some 3.5 times trailing price to book is the multiple that they've gotten. What about other housing finance companies? Abhishek has pulled the data out. He's standing by. Abhishek.
Well, Prashant, the multiple that Poonawalla Housing Finance has taken is almost near to where the others are trading, except for, Aavas Finance or Aptus, because they are strong in terms of their return ratios. To begin with, the ROA profile that Mr. Poonawalla spoke about, for Poonawalla Housing Finance Company, that's on the lower side when you compare to peers. So the peers like Home First Finance has a 3.8% ROA, Aavas Finance has 3.4%, Aptus Value has about 8.7%, while Poonawalla Housing Finance has an ROA profile of just 2.4%, which is in line with Repco Home Finance. So the spread or net interest margin profile of the HFC is also the weakest amongst peers. I just calculated a back on the envelope calculation for reference. It is at about 7.8% in terms of the spreads, while you are seeing spread of Aavas Finance being at 8.2%, and for Aptus it is more than 9%. So the spread is also on the lower side when compared to peers. The book has not been seasoned because you are seeing the growth coming in only last few quarters, let's say 4 to 5 quarters, which is why the operating efficiency is on the lower side. So by that I mean the cost to income ratio when you compare to peers is on the higher side. For Poonawalla Finance it's north of 54%, while for the rest of the field it's anywhere between 20% to 45% in terms of cost to income ratio. So valuation, the price to book value multiple shows that it's not too far away from the listed peers. However, despite the book not being seasoned and it's not seeing a complete business cycle of about 3 to 4 years that an HFC sees, despite that the valuation are slightly on the higher side. Back to you.
Abhishek, thanks a lot for that. While we were discussing the Poonawalla, saga, you have a big decline that we've seen in the market itself. So just let's focus back to the markets. 200-point decline is what we're seeing on the Nifty. 18,450 is where we are at right now. When we started the show, we were just below that 18,500 mark. And as we speak, a bunch of these heavyweights have seen a big decline. So pull up HDFC Bank, which of course is the heaviest weight on the Nifty. Bank currently has led the Nifty Bank lower by almost 400 points. Giving it company is Reliance. Reliance too has slipped to the low point of trade, a cut of almost 1.5% from the highs. And we have seen weakness in IT stocks all through today's trading session. Now they've extended their cuts as well. The IT index itself is at the low point of trade. So what was a trending down market, we are seeing acceleration now as we move towards the close. So how should you position yourself in this moment of trade? We do have with us Mitesh Thakkar joining in. Mitesh, your thoughts? I mean, now it looks like it's bordering on a bit of panic towards the end of trade.
Right, Mangalam. I think today, morning we didn't sustain about 18,600, and then I thought we'll come down to 18,450. We're practically there, and this decline is not showing any signs of slowing for the moment. I think the key averages on the Nifty are placed around 18,300, so we are marking that as the support area and not trading on the long side. We in fact hardly have long position, and with the passage of the day, we also reduced our stock long position. So I think very clearly this is a market which still looks like go through another round of pullback or a correction before we see some kind of consolidation at lower levels. 18,300 for me remains a very key level. If we start breaking below that, then we'll explore some aggressive shorting as well. For the timing, I have one buy and one sell call. Bata India is something which is breaking down, so that's a sell with a stop at 1670 for targets of 1610. And on the cash stock side, RCF is breaking out. It's made a 52-week high, and good consolidation of 6-7 days has been taken out. So that's a buy with a stop at 136 for targets of 150.
Right, thanks a lot for that, Mitesh. We'll come back to you. For the time being, though, we'll slip into a short break. On the other side, we'll continue our focus on markets. We'll also discuss the outlook for the markets with Pashupati Advani of Global Foray. Well, it's not looking too pretty. Once the 20 DMA got taken out, then we are seeing a slippy slide. And all through the day, we have seen a downtrending market. In the last 30 minutes, that's taken a quicker leg down as we speak. So let's take a look at that. Now on the verge of moving to around 18,400 odd mark. You do want a very ugly close today. So the bulls will be hoping at least these levels will hold out. But Deven Chauksi of KR Chauksi has been waiting by. Hi, Deven. Apologies for coming a little delay to you. Well, we were having that conversation with Adar Poonawalla, and we were also talking about some of those housing finance companies. What's your take? This deal was done at around 3.5 times price to net worth. And the other stocks, well, they're available at cheaper valuations, maybe for a reason. Your view on the space?
So, hi, Nigel. Good afternoon. Well, I guess I think relatively a smaller housing finance company, and mainly I think concentration was in affordable housing finance. So typically, I think a low ticket item, I think as they were probably called as. So I think obviously for Poonawalla FinCorp, it makes sense to get rid of I think such business, largely when I think you're getting the price which is far more decent enough, and at the same time, I think using the fintech platform to grow the retail finance business and in turn generate higher amount of NIM, I think is a kind of a proposition which they have looked at. And I believe I think it's the right strategy for a smaller company like 12,000, 13,000 crore AUM on the retail credit side. If they want to grow 30-40%, then possibly I think the capital that they would get out of selling this housing finance business would probably generate faster return comparatively. At the same time, I think another point remains important that housing finance being a business of, I think, long-term lending. In such case, I think your liability side has to remain very, very strong by way of raising deposit equally for a longer period of time. Whereas I think many of the fintech companies and I think the credit lending companies, I think on the retail side, they would typically operate with a liability side, which is I think a short-term, short tenure liability. So obviously, in order to manage the asset liability, I think it makes sense not to concentrate on the long-term finance, especially when probably your size of the book is just around 5,500 crores. I guess I think it's a right decision as I would like to look at, I think from Poonawalla FinCorp side.
All right, we take that point. But, you know, the other big story of the day has been the supply of paper coming in from various places. Sapphire Foods is one of the stocks which is doing well because of the large block trade that took place. The other couple of stocks in focus, IRCTC lower because of the government supplying stock almost 5% in the offer for sale. And the third one is VRL Logistics, where the promoters have sold, funds have been buyers. That stock to off highs, currently meandering below the flat line. Your thoughts on all three of them where there was some supply?
So in case of IRCTC, I think it is natural because government is still holding 67-68%. And possibly, I think by reducing the stake in tranches, I think this time around it could be around 5%. So in such situation, I think they may ultimately not want to hold more than 51%. And I think balance 15-17% that they are holding, I think would eventually get out of their fold. And that would probably also help them in showing their budget before calculation on the realization of funds. But more importantly, the strong investors coming into companies like IRCTC through this kind of OFS, in my viewpoint, that should be seen as a positive factor because as such, the model of the company remains pretty strong. A strong investor's entry into the cap table is, I think, definitely more important going forward, ultimately for the growth of the business of the company. So I see this as a positive. Maybe in the near term, there might be some overhang because of the supply of paper. But overall, I think it should be seen positive. Of course, the valuations are not as cheap. So any correction in the price during this kind of event, I think was more than welcome.
Okay, all right, Deven, we'll have to thank you on that note. Thanks so much for stopping by and discussing a couple of stocks with us. Looking forward to having a longer chat with you in the coming days, Deven. Well, for the time being, though, the low on the Nifty, 18,409, that's got defended, and we have bounced closer on 35 points from there. We're at around 3 p.m., so we can see a bit of a swing now in either which direction. Let's see how that goes, but we're almost there. So let's see whether or not the low of the day has been made, and we see a bit of a bounce up from these levels. But we have broken a crucial support zone, that's the 20 DMA, and we're trading 80 points below that level. Good time to get in Pashupati Advani of Global Foray, who joins in to have a quick chat. Hi, Mr. Advani. Good afternoon. Thanks so much for joining in. Well, it's been a good year for the markets, given the kind of challenges. And the banking names have done very, very well. What's your view out there? Is it getting overcrowded? Are valuations almost, priced in most of the positives? And do you expect a bit of a correction from here? Or do you believe it's still time to jump on?
Well, I've not been a big believer in the banking sector only because I think that there are problems down the road. But for this second half of 2022, it's been good for the banks because liquidity also has come into the system, and the NPAs have obviously got a lot better. Their realizations and all have actually happened. They've written off loans down to zero. They got some realizations, so that's also helped the indexes in a big way. So, but I just feel that there is going to be some kind of shake-up in the banking system. It's not going to be dire, but it's going to be, sort of like some of the weaker players are going to get marginalized, and some of the stronger players are going to come out ahead. That's why you've seen State Bank. I mean, the SBI, for example, is up almost double, more than double this year, almost 3 times. And it's been the leader of the whole pack, and it's been very good. But now we're going to have fintech banks, we're going to have new licenses, we're going to have new players. So let's see what happens. But at the end of it all, I'm not so wild about the banking space as others are, but it's also a large part of the index. So we can't forget about that. Nigel?
Pashupati, words like, you said shake out, right? Sounds, but you also said nothing dramatic. So I think, well, let's hope not a very large shakeout. By the way, the I highlighted this in the when we started. The PSU Bank Index is down 1.5%. The only reason I'm mentioning this is because it's gone up 10 days in a row. And today, with the rest of the market that is coming up, that has been Pashupati, in a way, in lots of ways, right? In this small cap, mid cap kind of, this was the last kind of, in a way, value sector, if I can use that word. Paper, sugar, textile. I'm sure I'm missing out a few others, and now PSU banks. Is it? Yeah, go on.
So again, it's like when the whole market is moving upwards, and certainly there's been a sort of nice wind following the Indian market. All the good sectors move up first, and then the not so good sectors play catch up, and that's what we've seen. And the nifty PSU Bank Index is probably the last sector to have jumped up. As you said, the last 10 days they've had plus. So today they're having some minus. But I think there are too many banks. You're also getting fintech banks coming into the space. Counters are becoming less relevant because of electronic banking, and so there's going to be huge disruption in this sector. And I don't know whether it's going to be banks or banks and brokers or banks and kiranas. Who knows who's going to come out of all this? But I think that there's definitely going to be some fallout, and some of the weaker players are going to have some issues. And it's also done because they did not done proper due diligence in giving the loans, and those loans will not get repaid back. And particularly, I see the area where this has most occurred is in white goods, where there seems to be, I would call it cowboy country. But let's see what happens. Prashant?
All right, we take that point, Pashupati. You haven't liked IT in the recent past, and we have seen the declines that we've seen in these stocks. They have underperformed and continue to underperform. At what point will you start liking them? When do they become attractive? That's point number one. And secondly, you said that you like hospitals and diagnostics instead. Are you still bullish on that?
Yeah, no, okay, so let me answer the first question. The IT stocks, the issue is that we have to change the business model. A lot of the companies are looking inwards globally, so they are moving their IT spend to local companies. And there's been a big movement on that. And we are obviously, our Indian companies who are in the US have had all sorts of problems penetrating. And that's why and the US has been the biggest market for us. Europe has also been a strong market, but not as strong as the US. And we're seeing that in the push on all the big and the second tier IT names. Regarding hospitals, yeah, we've got a huge population. Everyone's getting sick, and everyone has money to be able to pay for better quality hospitalization. And likewise, with COVID, the diagnostics had gone nuts because people were taking COVID tests. Now people are taking normal tests. So, there is some, slight pullback in that, but I think that it's going to be back to business as usual, but hopefully no COVID tests. Okay. So, very few COVID tests because, hopefully COVID is much more marginalized.
Just hope the worst of that, and we never ever go through a phase like that, Mr. Advani. But let's talk about the cement space. Plenty of excitement out there. We've got a new, entrant who's picked up ACC in Ambuja, that's the Adani Group. What's your view on this space? At one point of time, everyone is hoping for consolidation. My fear is that, suddenly people start growing organically. That'll be a bit of an issue. I mean, how do you approach the space?
Well, in the Adani case, actually, I think it's very synergistic to their business because at the same time as having bought the cement companies, he's also got Dharavi, which is like some crores of square feet. So he's got lots of building to do. So his own captive will probably sort that out. But, that apart, you are seeing some consolidation. And I think there is going to be interesting things to do in the mid-cap space, where mid-cap cement stocks are trading cheaper than, large-cap cement stocks. So therefore, there will be some consolidation in that space. India Cements, for example, which you've just flashed on your screen, has a large. The large street investor has taken a large position in it, and he's taken it probably 6 months to a year ago. So he's not a fool. He's far from it. He's one of the richest guys in India. So I think there is something, and we are doing infrastructure. The government is on the front of infrastructure spend, and cement is in the front of it. And now with Adani, who has a very favored relationship with the government also in the space, there's obviously going to be a lot more infra spend, and that's good for all the cement companies. Most of all, which would be his.
All right, take that point. Always a pleasure speaking with you, Pashupati. As we speak, the market post 3 p.m. hasn't really moved much, apart from the bit of a spike that we saw from the lows of trade. Instead, there are a bunch of stocks which are actually moving lower. So L&T, for instance, is one which has actually moved to the low point of trade. HDFC continues its slide downwards. So those are a couple of stocks from the front line end which are not doing too well. But let's talk about our favorite segment now. Why do I call it favorite? Because, well, we've seen, what comes out of this and what really happens from this. This is the D Street chatter that we're talking about with Nimesh. Nimesh, we'll talk about the stocks in just a bit. But today's market, there has been a sell on every rise.
Looks like, Mangalam, deep cuts, and that's in line with Asia as well. Every other Asian markets are under pressure. Looks like more of a global risk off. But the sense I'm getting is today's sell-off is backed by FI selling as well. So you probably see a decent sell figure from the larger FIs. That's the overall feedback. And the other sense is it looks like more of a profit booking, kind of a day. A lot of the stocks which have seen a big up move in the recent past have seen a bit of reversal and a bit of profit booking. So that pans out. I guess, even within financials, it's a day of, again, that's been the trend for the last many days within financials. Normally the PSU banks do well. Today it's a reversal. So some of the private bank stocks are doing good and backed by FI buying as well, and a bit of profit booking in the PSU banks and smaller stocks. Having said that, we're still in that range between 18,300 and 18,900. We've not gone out anywhere outside this range for the last many days now. So that's clearly visible. But clearly, the one thing is today's underperformance is largely in line with Asian peers, but it's backed by FI selling as well.
All right, so that's about the markets backed by FI selling. We'll watch out for that number. And now to the meat of it all, individual stocks. What do you have?
Okay, in terms of individual names, the first stock on my list today is PCBL, which is erstwhile Philip Carbon. Yesterday we saw a big move in that stock and backed by huge volumes as well. I believe in that large volumes, one of the large funds sold out and a leading HNI investor bought in yesterday's block. So since then there is a bit of activity back in this particular stock. That's the first one. The second stock is Indiabull Housing Finance. Again, it's been a curious case of why the stock has been going up of late. It's been relatively outperforming. My understanding is the declassification of Samir Gilot as a promoter should happen by the end of this month. So while there is a lot of buzz about a block deal or a stake sale, my sense is this cannot happen before the declassification of the promoter. So only after that is done, probably you'll see a big block coming in from Samir Gilot to sell. So that's something to track in Indiabull Housing Finance going forward. The third stock is Tata Steel. Within the metal names, after a very long time, there is a bit of buying back in this particular stock. So overall, the feedback is there is a small buying interest from larger institutions in Tata Steel at these levels. So that's the third one. And the last stock is Granules India. Within the pharma names, this stock is under pressure today, largely on back of self-loss. So the delivery volumes are expected to be quite high. But again, the pressure is largely from a leading FI, and hence Granules India is under pressure today.
All right,
Ramesh.
Go on, Mangalam.
No, I just wanted to toss it back to you guys.
All right, thank you, both of you. Thanks, Nimesh, for that. So, Philip Carbon, Indiabulls Housing, Tata Steel, and Granules India are the four stocks that Nimesh is highlighting. We'll take a quick break here. We'll come back. As always, buy today, sell tomorrow. Calls coming up with our technical experts. Mitesh will be with us in a bit.
Welcome back. Well, we'll focus on the headline index in just a bit, but for the time being, just focus on this one stock, Nava Limited. There's an BSE exchange notice that's come out there, and in fact, it's a very, very important release that's come. Over the last few years, the company has been pursuing international arbitration against Zambia Electric Supply Corporation Limited. That's for outstanding receivables. Now, this is important because the arbitral tribunal has issued a consent settling all the claims for them and also confirming the payout plan. Now, this is very important because the total arrears, the outstanding arrears aggregates to more than $500 million as of 31st of October 2022. And that's after adjusting for the cash discount. So this is a massive trigger for the stock that the street was waiting for. We'll have to wait by as to how this is going to be released and whether or not it will be honored. But we have had the management, a couple of times in the last few years, and they have said that they're optimistic about the outcome. But if this $500 million is going to be released on the back of this arbitral award, then it's going to be big news. Then we'll have to wait by for further clarity. But this is a big positive for the stock, at least going by what the BSE exchange notification, going by the details that we have, and explains why the stock has spiked up in an otherwise rather wobbly market. We'll get to that in just a bit. Maybe we'll try to get in more details as well. For the time being, let's get in Mitesh Thakkar, who joins us. Mitesh, well, it's not a great trading session for the bulls at least. But do you think that we can correct another couple of 100 points from here? The US futures as it is are indicating a bit of a downtick.
My sense is that I think, the Nifty could possibly now test 18,300. I think give and take 10 points here and there. But broadly, that's the level which I'm looking at. With that, I think, as I said earlier, we have kind of reduced our long exposure and have been exploring shorting as well. That's on the stock side. Index, I think I'll short once we get a closer break below 18,300. But for the time being, on the BTST side, iShares Motors is something, which could be taken as a sell side or STBT kind of a call. Keep a stop at 33.20, look for 32.75, 70 as the target area. And on the long side is Britannia, which is near the day side. It's come off slightly, but I think the overall structure is still very positive over here. So BTST with a stop below 44.40 for targets of 44.90.
All right, we take that point. Britannia is the one which is actually outperforming in an otherwise weak market. But Nava, of course, remember the market cap of the company is close to around 3,100 odd crores. So if they do go ahead and get that $500 million, will help them. In fact, in the Zambian subsidiary itself, they did have debt of over 3,000 odd crores. So that should do well for them. And that explains why the stock is moving higher over and above what Nigel just spoke about. So let's take this point further with Amrish Baliga, who joins in now as well. Amrish, it's been a very stock-specific market today, largely lower. In fact, as we speak, it's broken the lows of the day as well. 18,408 is where we are on the Nifty, down 250 points. In fact, it's threatening to break the 18,400 mark as well. But do you have any sense on Nava, the erstwhile Nava Bharat Ventures?
No, I've not really tracked that stock very closely, but from whatever has come out today, whatever announcement has come out, I think it would make a huge difference for them. Clearly looking at the sort of compensation which will be coming and looking at the market cap, I think the ratio is very high, so it should be extremely positive for them.
Okay, Amrish, hi. You have a pick for us as always, IOC, right?
Yeah, in fact, IOC is more of an opportunistic trade because, see, we have witnessed more than about 20% correction in crude since the beginning of this quarter. Basically, from October onwards, we have seen about 20% correction. And Russian crude imported into India is currently at about 16% of the basket compared to about 2% last year. This is important because you're getting a much deeper discount on Russian crude. Currently, it's at about $60. That's what we heard yesterday. Whereas if you look at the retail prices of petrol and diesel, they have remained unchanged for the last many months, and I doubt whether it will be reduced in a hurry. This is basically because we have seen a demand recovery in petroleum products. That's been quite robust. And if you look at the November demand, that was the highest in the last 8 months. Look at the inflation, that's also showing signs of cooling down. So like I said, I don't really expect the retail prices to in fact, come down quite soon. So this will be extremely positive for the OMCs because it will result in higher marketing margins. So Q3, I think earnings will be excellent. So from this basket of OMCs, my pick is IOC because that's been an outperformer all through. And I have a target of 94 for this by the time the earnings come out.
Okay, all right. Hi, Amrish. Amrish, I wanted to ask you about RBL Bank. Everyone counted that one and said, it's done and dusted. Well, that's been one of the big performers, right? At least in the last couple of months. From the peak, obviously, it's come down substantially. Even a downtrending market, that's managing to hold in the green. What's your view at around 170 rupees? Better opportunities, or would you bet on this one?
No, I think, there would be better opportunities because this, I think, is more of a extremely good bounce back. I don't think this is the beginning of a fresh rally because I still believe that there are skeletons which will still come out going ahead. Looking at the sort of, the growth which they had in the past, that surely would not have been without too many skeletons in the cupboard. So, I would possibly wait for the next 1 or 2 quarters earnings to see as to where it lands up. Till then, I'll not buy after this run-up.
We haven't spoken to you about Poonawalla. The deal that took place, we've spoken about it ad nauseum. We also had Mr. Adar Poonawalla join us here. What do you think, one's prospects in this company would be?
No, I think, if you're looking at the longer term, I think the prospects are extremely good. Clearly, looking at the deep pockets which the promoters have. But possibly in the short run, we could see some correction post this sellout. But then if you're looking at the next 3 to 4 years, I would surely buy it at lower levels.
Amrish, stay with us. We spoke with Neelkan Mishra of Credit Suisse earlier on our special segment, Outlook 23. His view is that the economy is a lot closer to the pre-pandemic path and going forward, growth will be better than consensus. Listen in.
I think that the economy currently is doing far better than what official data reports. I think the investors, or I would say even forecasters, are struggling with what tends to happen when you see a big break in trend. We think that the economy is a lot closer to the pre-pandemic path than what even official data is suggesting. And the slope of the curve, which is the growth that occurs going forward, is also going to be better than what consensus is at. So we are going to slow from here. We are slowing down. We think we are slowing from, say, 9.5% to more like 7%. I'm actually quite, as you can expect from my view on the economy as well, that we are quite positive on the 12-month forward EPS. So whatever is the 12-month forward EPS now, in December 23, it is likely to be 12 to 15% higher. Current forecast is for 15% higher number. We expect there will be some cuts. That is absolutely normal in any market, including ours. And there are, as you rightly said, many global-facing sectors, IT, metals, refiners, and I think some of those can come under pressure. But on the whole, I think double-digit earnings growth is reasonably likely. Financials are an outlier in terms of being very cheap when you look at what the PE multiple is going to be 12 months out. On top of that, we overlay what is the risk of earnings cuts. And again, on financials, there is very little reason at this stage to be expecting earnings cuts. So I know they are a consensus buy. They have been a consensus buy for a very long time. But occasionally, you have to resist the temptation of saying something new, just for the sake of saying something new. Banks and construction and cement and some of these are the best ways to play it.
The market's not pulling back at all. We are basically with 6 minutes to go for close at the low point of the day. Absolutely at the low point of the day, the Nifty and the Bank Nifty as well, both. So when you close like this, typically when you come back, there is perhaps a little bit more left. Let's see. As I said, 5-6 minutes left. but there is selling into the close, basically. Amrish, of course, is still with us. Amrish, I don't know if you heard Neelkant earlier saying global sectors, perhaps metals, IT, etc., things which, and Neelkant, of course, used to be metals analyst, he thinks they will underperform. Would you agree with that thought process?
I would agree with him because metals clearly will underperform, and IT, at least for the next 2 to 3 quarters, we'll see that the order flows will slow down, the earnings will be hit to a certain extent because the costs are going up. And overall, I think our markets are a bit overvalued at this point of time, and we should see some earnings cut going ahead. And Q3, I don't think will be a very positive surprise as such. So I think there'll be disappointments. And if you're looking at the economy, I think even the economy will slow down to a certain extent. And mind you, economy is not Nifty 50 stocks because there is a lot of pain at the lower end, which we see. And I think the divide is actually increasing between the haves and the have-nots. I mean, you're seeing luxury goods sales are really shooting up, but at the lower end, there's a lot of pain. And at the same time, see, we have seen huge amount of credit growth at the bottom of the pyramid in the last 2 to 3 years, and markets have taken it very positively. But look a bit deeper into it, you'll see pain at the lower end, and we could actually see more of NPAs. And overall, if you're looking at the business, I think there's a major shift from the smaller players to the larger ones. So in the market, we have the larger players and we are excited about it. But then, like I said, pain is there at the lower end. And I suppose the market is somewhere sensing this because despite the sort of momentum which we saw from the middle of October, and we could have easily touched 19,000 on the Nifty, but the amount of hesitancy which is there at the current levels, and this is despite a lot of benign news like inflation is lower, oil prices are coming down, but still the market is not able to cross that 19,000 levels. So, clearly there's a lot of hesitancy at this point of time, and we could in fact start moving down. So I think if we break this 18,200 to 18,400 band, I think there could be a lot of a crack in the market after that.
Amrish, have you been tracking Godfrey Phillips? Because until September, the stock was an underperformer as compared to ITC. Come September, the stock from almost 1,100 has rallied all the way up to 2,000. And now, not only has it crossed ITC's outperformance, it's actually one of the outperformers of the year, up 77%. Do you know of what's happening out there, and should one bet?
No, in fact, I've not tracked it very closely, but then I assume it is to do with, other than the normal business, I think it could be something to do with the land which they have, property, possibly it could be a property sale which could be talked about.
All right, Amrish, we'll leave it there. Thank you very much for joining us. Good speaking with you as always, and see you back again soon. Well, we'll end the session with any green at all? Not very much. The Nifty will come up first, and let me just see if we end at the low point. Not at the low point, but I think a few points away towards the end of the low, but pretty much there. 18,394. Similar kind of picture on the Nifty Bank as well. And the PSU Bank Index, as we've been pointing out, ended lower, but the other losses coming through in sectors like IT, metals, and the real estate space, which were down very, very sharply. Tech Mahindra, Infosys are some of the tech losers in the Nifty, and then you have the HDFC twins, HDFC and HDFC Bank, and there was Titan as well, which lost a fair bit. Broader markets, Nigel.
Well, broader markets as well, they did come in for some profit taking, though they fell in line with what the headline index was doing. So IRCTC was under pressure. That's because of the OFS. Union Bank, well, that one did come in for some profit taking. It was down close to around 5%. Metropolis as well was down close to around 4%. Remember, we're talking about large F&O names. Bank of Baroda saw some profit taking, was down 4%. Ambuja Cement, some worries in select parts of India that some of their plants are facing. So Himachal Pradesh in particular. So that one was down 3.5%. PVR as well, unsure about the box office and how that's going to shape up. So some worries on that front. So that was down close to 3.5%. NCC as well, down 3.5%. And JSPL, after rallying yesterday, well, that's come in for some profit taking. India Cements, we have seen this in the past. The stock correction around 230 and then sees a bit of a bounce. Today it's moved down all the way to around 238 odd. Let's see whether or not this time around it takes some bit of support. On the flip side, we had select gainers as well. Pyramid Enterprises, the surprise gainer. India Bulls Housing Finance, Nimesh said maybe reclassification of the promoter entity. It's been moving, in and out of the F&O ban as well. And maybe valuation comfort, but on a price-to-book basis, the problem is the street is a little bit skittish on the book value. All in all, it was a disappointing trading session today. The Nifty ends with a cut of closer on 260 points odd. We'll be ending closer around the 18,400 mark because of the averaging. The Nifty Bank, that got a harder knock, was down 650 points, while the mid-cap index as well did see some pressure. Number of stocks declining in comparison to number of stocks advancing, but in the ratio of around 2:1. Well, we'll wrap up on this edition of Closing Bell, but you don't go anywhere. Our special on Indianomics comes up next.
Powered by LIC, हर पल आपके साथ।